Good evening. Today, due to certain difficulty, Today, we will talk about the corporate social responsibility provisions. Can I have the next slide? Corporate social responsibility is a concept that is of recent origin, though throughout history, businessmen have tried to give back to society a certain portion of their profits. Compulsory corporate social responsibility has come only of recent origin. Now, the idea is simple. Companies must make profits and maximize shareholder wealth. This is an important goal, no doubt about it. But this is not to say that this is their only goal. So they also owe a duty to serve the community. Okay, for this, they have to plow back some little portion of their profits back into the society. Now, CSR is a conceptual framework. The idea is that companies will give voluntarily, but under the Companies Act, corporate social responsibility contribution has been made compulsorily. So the company has to give a certain portion of its profits compulsorily. It has to spend it on CSR. Can we have the next slide? Under Section 135 of the Companies Act, CSR has been made compulsory. There is also a separate set of companies, corporate social responsibility policy rules. Okay, this has to be complied with, and every company, including its holding or subsidiary, even a foreign company having its branch office or project office in India, has to spend money on CSR. Okay. Now, for a foreign company, how do they compute net worth, turnover, net profit, etc.? Will be in accordance with the balance sheet and profit and loss account prepared in accordance with the provisions of Section 381(1)(a) of the Act. For foreign companies, a separate set of accounts are to be prepared in India, and based on that net worth, turnover, and net profit, the profit contribution will be decided. Next. Certain activities have been clearly defined as not considered to be CSR. Schedule 7 gives what is considered to be CSR, but certain activities are clearly defined as not considered to be CSR. So, for example, any activity which is undertaken in pursuance of the normal course of business of the company is not CSR. Any activity which is undertaken in pursuance of the normal course of business. That means, for example, anything that you do which will benefit the staff or employees of the company and which is in the normal course of business. For example, providing tea to the employees, or building a shed for the lady employees. This is part of Factories Act. It is compulsory. Similarly, if you cannot do something and say as a part of your business and say that is CSR. Many times we have people claiming that they are doing something which is CSR, but is in the nature of business. So in those cases, normal business expenditure cannot be booked under CSR. So if a company wants to claim business expenditure, similarly, the only exception for this is R&D. See, normally research and development activities, however beneficial to society, will come under the business of the company. Therefore, any money spent on R&D would be, strictly speaking, not CSR. However beneficial to society it might be, right? Exception is when you have done any research and a pharma company, which is recognized pharma company, has done some work related to COVID-19, that alone, those expenses alone will be considered as CSR. Other than that, any expense which is undertaken in pursuance of the normal course of business of the company will not be considered as the CSR. Even for the COVID-19 expenses to be considered, they should be carried out in collaboration with an institute mentioned in item 9 of Schedule 7. Schedule 7 talks about funding certain research and other universities and all. So this research activity should be carried out in collaboration with such an institute. One, and those details are to be clearly disclosed in the annual report. If these two conditions are satisfied, then very, very limited purpose for only 3 years, COVID-related research would be exempted. Otherwise, if it is business, it is not CSR. Straight away. Next. Any activity undertaken by the company outside India. See, so if you're saying that you're going to go to Ukraine and do some work, or if you're going to go somewhere where there's a war, Sri Lanka, and do some work, sorry, you can do it, but that would not be counted for the purpose of CSR. Okay? Any activity undertaken by the company outside India, only exception, training of Indian sports personnel. See, one of the CSR that you can do is sponsoring sports people who are going for international and national tournaments. Now, when they're going for international tournaments, they may have to be trained abroad. So when an Indian sports person is being trained abroad for a national level or international level tournament, and you are sponsoring it, that would come under CSR. So the training should happen abroad, but the person should be an Indian sports person who is representing a state or union territory at the national level or international level. For that purpose alone, very, very limited purpose, you are allowed to spend money outside India. But otherwise, any money spent outside India, whatever may be the laudable purpose, will not become CSR unless it is spent in India. Contribution of any amount directly or indirectly to any political party. Later on, when you come to final, you will study that any contribution to political party is allowed under 182. But it cannot be counted as CSR. You cannot treat it as part of your corporate social responsibility commitments. Any activity which benefits the employees, which is as defined under clause K of the Code of Wages, section 2K. As I told you, if you build a shed for the employees as part of the Factories Act or any other commitment under with the union and all, that cannot be treated as CSR. Okay. Activities supported by the companies on sponsorship basis for deriving marketing benefits. See, the minute you put your logo there or your company name there and then say it's part of my marketing activity, you're out. CSR cannot result in marketing benefits. If it does, then that expenditure will not be treated as CSR. Any other activity which is carried out for fulfillment of statutory obligation under any law, when you're only complying with the statutory obligation, it will not be considered as CSR. Next. So, Schedule 7 of the Companies Act gives a lot of items which are qualifying as CSR. For example, eradicating hunger, poverty, and malnutrition. I will not read the whole thing for you. You can read it. From the exam point of view, not important. Just be broadly aware of what these are. Eradicating hunger, poverty, and malnutrition, and promoting education, including special education, promoting gender equality, empowering women, etc. So my suggestion, please remember that Schedule 7 gives a list of activities which are to be considered as CSR. Broadly, remember Schedule 7. Idea is, in future, if for your company you need to find out whether this is CSR or not, you should refer to Schedule 7 and see if it is there. Can we move on? Next. See, once I got a call from an MD of a company, large listed company, asking whether Goshala, they want to promote Goshala, whether that will come under CSR. So their company's motive was to promote Goshala. So if you see here, one of the items here is ensuring environmental sustainability, ecological balance, protection of flora and fauna. Fauna is wild animal. Also, they're including animal welfare and agroforestry. So I took that animal welfare and then I gave them an opinion saying any amount spent for Goshala or Go Rakshana Shala, which is different from Goshala. Where you have healthy cows, milk them, sell the milk, etc., you're doing milk business. Sorry, that is not CSR. But if you're having Go Rakshana Shala, where you take sick cows and you maintain them. That is CSR. I mean, it's a fine distinction, even maintaining normal cow. But in case the company is deriving any income from that, we will see later. But whatever it is, animal welfare comes here. So like national heritage, art and culture and all. See, many companies have foundations that promote art. So that is allowed. That is a CSR activity. Like that, we need to know. Similarly, any measure for armed forces veterans. Similarly, training to promote rural sports, like for example, kabaddi or rural sports or ethnic sports or even nationally recognized sports. Paralympic, where for differentially advantaged people, we have sports, etc. So those activities, these are all CSR. Next, the whole list of items here, which you can see. Next slide. So if you give directly to the contribution to the Prime Minister's National Relief Fund or PM Citizens Assistance and Relief in Emergency Situation, PM Cares Fund, straight away it's CSR. You give it to them, they know how to spend it. So you give it to them, then it is done. Okay. Or any other fund set up by the central government for socio-economic development, welfare of the scheduled castes and scheduled tribes, other backward classes, minorities and women. You directly contribute to these funds, that becomes part of your CSR. Okay. Also, you can give contribution for technology incubators, rural development projects, slum area development, disaster management, including relief, rehabilitation, and reconstruction activities. So there are a lot of varieties. So you have a huge menu to choose from in Schedule 7. Moving on. Next slide. Now, we've already seen that COVID-19 pandemic was a special case where, in case you're doing any medical relief connected with that, etc., 1, 2, and 12, any expenditure related to COVID-19 pandemic would, if it is spent under 1, 2, and 12, would automatically come as eligible CSR activity. But anyway, COVID-19 is no history, so let's not bother about that. Next. Very important, sir. Possibly the most important part of this topic. Kindly try to remember, this is which are the companies required to constitute a CSR committee. The following companies compulsory. Okay. Listed companies compulsory. Listed companies should have constitute a committee. Every company other than listed company which is having net worth of rupees 500 crore or more, turnover of 1,000 crore or more. Do remember this? Net worth of 500 crore or more, turnover of 1,000 crore or more, net profit of 5 crore rupees or more. In any year, at the end of the year on 31st March, you've crossed net worth of 500 crore or turnover 1,000 crore or net profit 5 crore. Then if you have crossed this during the immediately preceding financial year, for example, 23 March balance sheet, P&L, if you see any of these numbers have been crossed, then for 23-24, you become an eligible company. You shall constitute a CSR committee consisting of 3 or more directors, out of which at least one director shall be an independent director. Independent director is one who has no financial gain from the company. So for a listed company, 1/3 of the board, 1/3 of the number of members of the board should be independent directors. Okay. The composition of the CSR committee, if you remember, has to be disclosed in the board's report. Next. So please remember the 3 limits: net worth 500, turnover 1,000, and net profit 5. Can we have next slide, sir? Next slide. Yeah. Next slide. So the calculation of net profit is as per the P&L account, except that any profit arising from an overseas branch can be excluded. So in case you made profit from an overseas branch, that can be excluded. Similarly, if you receive dividend from other companies, but be careful, those companies should be covered under 135. Suppose you have invested in group company and that company has already complied with 135. It is 135 is applicable to it. They are spending CSR. See, logic is simple. They have spent CSR and then giving dividend to you. So post CSR, it has come to you. So the dividend receiving company can remove the dividend while calculating net profit. So the dividend received from company, which is already complying with 135, which is coming under 135, can be removed. So normal profit as per P&L, any overseas branch profit you remove, and dividend received from companies complying with PA 135, remove. Whatever the balance you have, that net profit should not exceed 5 crore. So, okay, this is applicable. This is net profit definition under 21H. So kindly remember that. Next. Net worth. We have seen the definition. Again, I will repeat it for you because 100% this could come in the exam. So therefore, remember the definition of net worth. Aggregate value of paid up share capital. Paid up share capital includes preference capital also. All reserves created out of the profits. Only profit. See, any reserve which is created out of profit. Capital means capital redemption reserve. Any capital item not to be taken. Okay, all reserves created out of profits. Securities premium account and debit or credit balance of P&L account. See, debit, you have to reduce it here. Credit, you have to add it. So that has to be. Then any accumulated losses have to be taken. So, but one simple confusion here is, see, if you're going to take P&L account debit or credit, now the accumulated profit or loss, accumulated loss could include this also. So in the exam, in case you come across such a problem, make a clear note that if accumulated losses, if it includes this debit, current year's loss, then that's one way. If it does not include, so you have to make your assumption. Assume that that is taken separately, in which case you will reduce it. If you say that is already included in accumulated losses, then you won't reduce it again separately. Similarly, deferred expenditure and miscellaneous expenditure not written off have to be considered. Okay. So any reserve created out of revaluation of assets, write back of depreciation and amalgamation not to be considered. Okay. And remember, paid up share capital includes preference capital also. So continue. Next, sir. Here is a small, practical or computational problem. RERA Limited, a company incorporated under the Companies Act, having paid up share capital of 10 crore INR, turnover of 100 crore, net profit of 3 crore, and securities premium of 300 crore for the financial year 21-22. Wants to know if the CFO has informed that the CSR is required to be constituted. Directors seek your advice. Now let us see. Paid up share capital of 10 crore, turnover 100 crore. So turnover 1,000 not satisfied. Net profit INR 3 crore, less than 5 crore out. Securities premium 300, paid up share capital 10, so 310, and net profits 3, so 313 crore. Okay. Now, can I have the next one, sir? Next. So the net worth is 313 crore, means paid up share capital plus net profit plus securities premium. Now, it is not fulfilling any of the criteria. 500 crore net worth, 1,000 crore say turnover not covered, 5 crore profit. So RERA is not fulfilling any of the criteria. Therefore, it is not obligatory. Next. See, ABC Limited has the following kind of thing. Net worth as on 31/3 is 100. Turnover is 500 and net profit is 100. Now, whereas turnover on 39/20/21 is 1,000. So your doubt might be, should we consider the last financial statement audited or provisional? Always remember, for the purpose of finding out whether the CSR committee should be constituted, you have to consider the figures as per the audited financial statement of the immediately preceding financial year. Immediately preceding financial year, right? So in that sense, there seems to be no criteria. Next. See, the company does not fulfill any of the criteria as per the thing. So it has to take it. Now, ABC Limited is not required to constitute a CSR committee for the financial year 21-22. Friends, I'm sorry, even if it's a listed company, I'm correcting myself now, whether listed company or unlisted company, if it does not satisfy these criteria, no need. If it does not satisfy these criteria, no need. Even if it is a listed company, if it does not satisfy these criteria, no need to go for compulsory CSR. In this case, no. Next. Now, in some cases, it is quite possible that an unlisted public company may be covered in this category, but it may not have to appoint independent director. See, the criteria for independent director may not apply to it. So we said that there should be one independent director. Now, it can have such a company which is not compulsorily required to appoint an independent director can have a CSR committee without such a director. Also, a private company may satisfy these criteria. Even a private company satisfying these criteria has to spend CSR. So, but it may have only 2 directors, then it can constitute CSR committee with only 2 directors. Okay. And for foreign company, at least 2 persons should be there. With 1 person should be an Indian, a person's resident in India, and the other person shall be nominated by the foreign company. Next. Now, once a company satisfies the CSR requirement in 1 year, for example, as per the figures of 23 March, a company comes under the CSR net. But 24 March, it does not satisfy what should be done. So 23 March, figures satisfied. 24 March, not satisfying. None of it is satisfied. Let us say turnover went up. Again, other 2 criteria not there. On 24 March, even the turnover is not there. So what to do? They are saying once you come into this CSR net, okay, then if you cease to be a company covered under subsection 1 of section 135 for 3 consecutive financial years. So they're saying 23 you got it now. Now 24 also you should not satisfy. 25 you should not satisfy. 26 also you should not satisfy. 3 consecutive financial years, if you are not satisfying, then from the next year onwards, that is 26, 27, you will not constitute a CSR committee, you may not contribute anything. But for 3 years, you have to contribute, whether you like or not. So once you get into the net, then for 3 consecutive years, you should see to it that you are not satisfied. Then you will go out. Otherwise, you will be there. Okay. This is very peculiar. So in 1 year, you become compliant, you get caught in the CSR category. Next year you are out. So sorry, you cannot go out. Second, then 3 consecutive years you have to see whether you are not satisfied. Then only then you can get out. Okay. So constitute a CSR committee. You have to constitute till it loses. For 3 years you cease to be. Then the last year, once you satisfy, then you are out of the thing. Again, till it meets the criteria. So if for example, 23, 24, 25, you don't. Then 25, 23, so 23, 24, 23 March, 24 March, 25 March. So now 26 March, if you are not satisfying, then you don't have to do it for 26, 27. But again, 27 you are doing, then you come back. Again, 3 years, and so on and so forth. Now, see, later on, you'll be seeing that every company should contribute 2% of its average net profits of the last 3 years. For it, I'll come to that anyway. 2%. So if that 2% does not exceed 50 lakh rupees, where the compulsory amount to be spent does not exceed 50 lakh rupees, then no need to constitute a separate CSR committee. The board itself can be the CSR committee and it can proceed. So where the amount to be spent does not exceed 50 lakh, then you don't have to have a separate CSR committee. The board itself shall act as the CSR committee, right? Next. So the job of the CSR committee is to formulate and recommend the policy, CSR policy. It has to give a list of CSR projects approved by it, how it will be executed, how the funds will be utilized, how it will be monitored, what is the reporting mechanism, all that. See, this becomes relevant for a large corporate. But for a small company, even then they feel that it should be structured and spent usefully. So they want the CSR committee to come out with a broad strategy. Also, at the end of the project, if there is a need for any impact assessment, was there any impact on the society? That also has to be studied. Okay. Of course, such plans can be altered by the board based on the recommendation and reasonable justification. Sometimes the focus may be there, then they may want to refocus it. Next. Now, the board of such a company which has a CSR committee shall approve the CSR policy and disclose the contents in its report and also place it on the company's website. So these are all pure theory part. Let's move on. Next. See, the activities may be carried on or undertaken by the company itself. In case the company does not have the bandwidth to do it, because after all, the company's job is to manufacture or sell goods. So it cannot do all this. So it may allocate the fund and it can identify a NGO, a company established under Section 8 or a public trust or a society which is registered under Section 12A of the Income Tax Act and 80G. Such an entity, okay, can be used. Either even a Section 8 company established with the central government or state government, or any entity established under an act of parliament, and large the company itself forms a trust. The company itself forms a society or a Section 8 company. A. D is some other NGO. For example, if you are having a trust and that trust is registered under 12A and 80G, you can also get yourself registered for CSR. In fact, almost all public charitable trusts and societies today have got themselves registered with the MCA and they've got a CSR ID. Once the CSR ID is there, they can go to companies and the company can give fund to them for carrying out CSR activity, provided they have an established track record of at least 3 years in undertaking similar activities. Next. Now, if the trust wants to undertaking any CSR activity, then such a trust or society should apply in CSR 1 and get the CSR ID, CSR registration number. Okay. So this should also be verified by a chartered accountant in practice, etc. And it has to be done. So most trusts are CSR 1 registered trust. So you just have to apply. Generally, they give you the CSR ID immediately. Then you have to go to the companies and you have to get the money and start spending. Next. So any amount which is spent through these entities would also be counted as CSR spent. Now, the company may engage in international organizations for designing and implementing. So in case it's a huge fund, for example, large companies like ITC, Tata Group, they'll have huge CSR money. So they may engage in a NGO which has got a lot of statistics and data to tell them how to spend the money. For example, you have a company like Wipro, where Mr. Azim Premji has set up a separate foundation. The Azim Premji initiative is there, by which the philanthropic initiative, APPI, Azim Premji Philanthropic Initiative is there, through which Wipro spends huge amount on CSR. So the APPA in turn may engage international organizations for designing and monitoring and evaluating CSR project. So Wipro will give money for that. Now, whatever it is, such entity also can be used for creating capacity building, etc. Now, a company can also collaborate with other companies, meaning suppose 3 or 4 companies are working in the same area, they can collaborate together, provided they are able to show separately the amount spent by each of them in their balance sheet, so long as that is kept track and reported. Okay. And the board also should ensure that the funds have been utilized for the manner approved by it. Okay. Next. Suppose a company has a multi-year project, meaning some projects may take long time. For example, personally, I am engaged in a project, it is CSR funded through my Rotary Club, where we are building a toilet block in a school where economically weaker section children are studying. For hygienic purposes, we are building a separate toilet block, especially for the girl children. So, which is very, very important. But building a toilet block cannot be done in 1 year. So, we are doing it as a multi-year project. So, it may go beyond 1 year, maximum 3 years. Okay, you can spend money. So, you will have to allocate funds and say that this is a multi-year project, which means the entire fund may not be spent in 1 year, but the entire amount should be spent within the 3 years. Okay, so once it is approved initially, then it can go beyond 1 year and you can spend it, provided you identify it as a multi-year project. And 3 years is the maximum. See, in our case, it started in 1 year, ended in another year. For example, it started in 22, it's ending in 23 now. That's all. It started in 22 March, will end in 22 September. That's it. 23 September. That's all. In case of an ongoing project, the board of a company shall monitor the implementation of the project with reference to the approved timelines and year-wise allocation. And you can make modifications, etc. and do it. This so the board of the company should have the ability to control it. So what we normally do is, once as a Rotary Club, we spend the money, we give a report to the company saying, hey, your money came, it has spent for this, it has reached this stage, still yet to be done. Second stage, next year it will be over, your entire money will be spent. So they will in turn report it to the board and it will go. Next. This is the next most important thing. We saw the limits when CSR will be, you'll have to constitute a committee. Now, every company which is required to form a CSR committee shall ensure that the company spends in every financial year, please remember this, yaad rakh dijiye, at least 2% of the average net profits of 3 immediately preceding financial years. 2% of the average net profits of 3 immediately preceding financial years. So 2%, you have to find out on what? On the net profit that I explained now. You have to remove the foreign, if any profit from any foreign company branches there, remove it. Also, dividend received from companies already complying with 135, remove. Balance on that, you take last 3 years, immediately preceding 3 years, divide by 3. Whatever number you get, 2% of that should be spent. 2% of that should be spent. Okay. Now, in case the company has not completed 3 financial years, then whatever has been completed, take it. Always remember that the local area should be preferred. You should try to do within the local area, because the idea of CSR is help the society in and around you, the villages around you, like that. In fact, we are talking only about the theories part of this subject. Once you become a CFO of a large company and you get into this practical aspect of CSR, see huge, beautiful ways in which companies have spent CSR. I visited so many of these factories and buildings and companies. They have shown me their CSR work, and I've been very, very much impressed the way companies are spending money for benefiting the society around them. Okay, many cases they have done for planting trees in a very real way. They have done it so that it works, so on and so forth. Okay. But be careful. Anything that you do which is benefiting your employees or part of business, sorry, no. Okay. Cannot be taken. For example, one cement factory, the quarry they converted into an artificial lake. And they actually used it for not for drinking water, but for spraying in the factory. See, cement dust will be flowing always in a cement plant. So it has to be sprayed down. For that, they recycled the water from the quarry. The rainwater they collected at the quarry and they recycled. All this is fantastic, but it's not CSR because it's part of their business. They're only doing it as part of their business. But 100% it's beneficial, environmentally friendly. It in a way helps the society around them also because it settles the cement dust, which doesn't spread. Once you pour water, it goes to the ground. It doesn't spread in the air. Definitely it's good, but sorry, not CSR. Be very, very clear. Anything to do with business, not CSR. Even if there's a remote connection with business, shy away from it. So suppose the same company goes to the villages and sets up, evening study rooms. See, many of the village children don't have basic electricity in their house. So what many NGOs do, and it's a fantastic thing, is they build a nice shed with a lot of books, a library, and one local volunteer comes in the evenings. They have bright lights there and put tables and chairs, and nothing. These children get a chance to come and study. They get a free place where mentally they are free. They can study for 2 hours and go home. That itself will make a big difference for them. So that would be CSR. That would be a great CSR actually. So companies may build CSR capabilities of their own personnel, etc. But whatever it is, any administrative overhead, any amount spent for building the CSR within the company, the persons who are going to monitor CSR, whatever money you are spending on that amount shall not exceed 5% of the total CSR expenditure in one financial year. So during the year, I have to spend the average of 2% of the immediately preceding 3 financial years. That 2% can include administrative, but that cannot be more than 5% of the total CSR expenditure. And that is more than enough, believe me. That is more than enough. Next. So at least 2% of the average net profit should be spent. We've already seen this. Can we move? Next. Here's a practical question just to reinforce our understanding. Tirupati Limited, a listed company, has made the following profits. So it's got 5 years profits have been given. But what we are concerned with is only the last 3, immediately preceding 3 years, right? So we have 50 plus 70 plus 30. So 70 plus 30, 100 plus 50, 150. Next slide. Can we go to the next slide? Yeah. So 30 plus 70 plus 50, 150. Out of that, average 150 by 3. A by 3 is 50. Out of that, 2% of 50 crore is 1 crore. So 1 crore should be spent for CSR purpose. 1 crore, right? That is the compulsory spend. Friends, you can spend more. What happens for that we'll see later. But definitely you have to spend 1 crore. 1 crore definite. Yeah. Next. Once again, I'll go through this. Can we go back? Please go back. The last immediately preceding 3 years, 30, 70, 50, 150. Divide by 3, you get 50 crore. On that 50 crore, you calculate 2%, 1 crore. Now, out of that 1 crore, only 5%, that is 5 lakhs, can be spent for administrative. Got it? Out of that 1 crore, only 5%, just for your understanding, only 5% can be for administrative overhead. 5% of 1 crore, okay, that is 5 lakhs, only can be. Got it? Moving on. Next. So in case the company does not spend that money, what happens? Okay, then it has to specify the reason in the report. And see, sometimes for an ongoing project, you may not spend the entire amount in this year. You can push it to the next year or second year or third year. Other than ongoing project, if you have not spent, then that unspent amount should be transferred to a separate fund within a period of 6 months from the expiry of the financial year. So they are going to set up a fund, CSR fund. Government will be using it for CSR work. So if you have not spent it, no problem. You don't keep it. You transfer it within 6 months to the fund specified in Schedule 7. Okay. Now, till such time, they will ask you to transfer it to the Prime Minister's fund. Don't worry about it. If the fund is not started, they will ensure that it comes to some other fund. Don't worry. Any surplus arising out of the CSR activities shall not form part of the business profit of a company. See, I gave an example now. Suppose the company is having Goshala. Now, in that Goshala, good cows are also there. Let us say that they are selling the milk products, making money. No problem. But that surplus should not be added to your P&L balance. Sorry, it has to be plowed back. Plowed back means, again, it has to be used for the same project. In case, if you have not used it, then that surplus has to be transferred to the unspent CSR account. Okay, and it has to be spent as per the CSR policy. If you have not spent it, then transfer it to your fund as usual within 6 months from the expiry of the financial year. Okay, so any profit arising from a CSR activity, surplus arising, can happen. It is quite possible that a CSR activity can result in surplus. That surplus cannot be taken by the company. It has to be plowed back, used for the same project. Next. In case the company has spent more, see, I am expected to spend only 1 crore in my example. Suppose during there I spent 3 crore or 2 crore, then that excess 1 crore is there. Now, that can be set off against the requirement up to the immediate succeeding 3 financial years. So suppose 23-24, I have spent 2 crores. When I have to spend only 1 crore, I have spent 2 crore. That excess 1 crore can be adjusted within the next 3 financial years, provided the excess amount available for set-off shall not include surplus arising out of CSR. Any surplus on CSR should be spent in that year. In case you have not spent it, you have to take it to the unspent CSR. That we'll see how it is working. Otherwise, you have to transfer it to the fund. And the board should pass a resolution. Next step. See, there is this company, Mary Limited is a listed company having turnover of 1,200 crore. So they have to have a committee. So the CSR committee of the board recommended a CSR project. But that amount requires 5% of the average net profit for the last 3 financial years. They have to spend only 1%. But they have the CSR project, they are going to spend 5%. They don't mind. In case they do that, will such excess expense be counted? Yes, it will. You know that. Next slide. Any excess expenditure can be set off against the requirement to spend under 135(5) up to immediate succeeding 3 financial years. Subject to that condition, it should not include any surplus. So, suppose I have to spend 1 crore. I have spent 5 crores. Now, the remaining 4 crores, I can, in case the next year I do nothing, no problem. This amount can be adjusted for 3 subsequent financial years, right? Next. In case you are having any capital expense, for example, I gave you example of a toilet block. Now, can we do that? Yes, you can, provided that asset should not be in the balance sheet of the company. Okay, that capital asset should be held by either the Section 8 company or a trust or society. In our case, what we have done now, even the Rotary Club is not holding it because we are also not allowed by Rotary to have fixed assets. So the entire toilet block is being transferred to the trust, which is running the school. That trust is owning that toilet block. We have transferred it by way of gift to them. So, in case such a society or trust is not willing to take it, then you can give it to the beneficiaries of the said CSR project. So maybe form a separate group, AOP, and give it to them. Or you can transfer it to a public authority like the Panchayat or whatever. And so idea is it should not be in the balance sheet of the company. Please remember, in the exam they might ask you, so-and-so company wants to donate a school building. They want to keep it as part of the assets of the company in the balance sheet. Can they do that? No. It should be, you write this, it should be transferred to a trust or Section 8 company. completely. Any capital asset, suppose part of CSR, you're holding it in the balance sheet. It is already in the balance sheet. Then that should also be transferred within 180 days, which should be transferred to a trust or whatever within 180 days. Idea is a company should not create assets and say that CSR and then keep it as an asset in the balance sheet. No. Once you have said you are given. That's all. You have to send it out. No, mama, it is not mine. Give it. It should not be the balance sheet of the company. Next. See, in case any amounts remaining unspent pursuant to any ongoing project. See, this is, if it is a normal CSR, if you have not spent it or surplus, then within 6 months you have to transfer it to the fund. But suppose there is an ongoing project and an amount is remaining unspent, then that amount should be transferred by the company within a period of 30 days from the end of the financial year to a special account to be opened in a bank, scheduled bank. It will be called unspent CSR account. So if it is an ongoing project and there is an amount remaining unspent, you need not transfer it to the fund immediately. You can transfer it to unspent CSR account. That amount should be spent by the company as part of its CSR within a period of 3 financial years from the date of transfer. So, ongoing project, amount is remaining unspent, transfer it within 30 days from the end of the financial year to unspent CSR account. It will be there. You can use it for 3 years. Now, on expiry of 3 years, even still you have not utilized it, then it has to be transferred to the fund within 30 days from the date of completion of the 3rd financial. So let us say that 23 March, you based on 23, 22, 21, you have to spend. You had an ongoing project. That ongoing project got over in 24, 25. 25 also you have not spent 1 crore. Then within 30 days from 31/3, that is before 30th April 25, you have to transfer it to the unspent CSR. Then for 3 years means 26, 27, 28, you can spend. 28 March also you have not spent it. Then within 30 days from end of 28, you have to transfer it to the fund. That is how you have to. Okay. Next. In case the fund is not specified, it can be transferred by the company to any fund included in Schedule 7. As I told you, they will see to it that you transfer it to PM Cares fund and take it. They won't let it go so easily. Yeah. Next. Now, the board's report should clearly mention, okay, the annual report on CSR in Annexure 1, Annexure 2, etc. Also, for a foreign company, it has to file a balance sheet under this act. A foreign company having a branch or project office in India should file a balance sheet and financial statement under this act. That financial statement should include the CSR matter also. This is part of the board reporting every year as part of the board report. Next. So when the CSR obligation is 10 crore or more, then where the total CSR obligation, that is 2% of your average net profit is 10 crore or more, such a company only should have impact assessment. So for all CSR projects having outlay of 1 crore or more, suppose the company is having 20 crore is the amount to be spent. 2% comes to 20 crore. Out of that, it is having 3 projects which are 5 crore. Then those 3 projects having outlays of 1 crore more, there should be an impact assessment. Okay. So you have to see which are all the projects which are having outlay of 1 crore or more. That company should have CSR requirement of 10 crore or more. The 2% should be more than 10 crores. Then for those 1 crore and above projects which have been completed not less than 1 year before that, you have to do an impact assessment. So let us say that out of the 3 projects, 1 project got completed in 23-24. Then for that 1 project, more than 1 crore, You are a company having more than 10 crore, you have to have an impact assessment. Impact assessment is where an NGO, there are specialized agency for it. They will go to the area, rural area where you're doing, or the beneficiary area. They will do they will have a poll. They will go around and ask, are you finding it useful like that? Based on that, they will give you a report saying, whatever you have spent has had so much impact on society. Such an assessment should be done. Yeah. Next. It's a very specialized activity. Only NGOs can do it. Next. The impact assessment should be placed before the board, and also it should be annexed to the annual report. See, if you're seeing the annual reports of some of the large companies like Tata, go through the CSR report. There you will find for 1 or 2 projects, they would have given impact assessment also. Now, a company undertaking impact assessment may book that expenditure for the impact assessment, that expenditure towards CSR. But it should not exceed 5% of the total CSR spent for that financial year, or 50 lakhs, whichever is less. See, administrative cost, already we have given them 5%. Plus, another 5% is given for impact assessment, or 50 lakhs, whichever is less. So any expenditure which has been made towards the impact assessment will also be added to the CSR expenditure, but that amount cannot exceed 5% of the CSR expenditure, or 50 lakhs, whichever is less. Okay. So first you have to calculate CSR amount based on 3 years profit, then calculate 5%. Your administrative cost cannot be more than that. It is part of that. Plus you can add another 5% for the impact assessment. Okay. But either 5% or 50 lakhs, whichever is less. Okay. Yeah. Going on. Next. So the board of directors shall mandatorily disclose the composition of the CSR committee, CSR policy, etc. on the website also. Okay. Next. In case there is any default, the amount is really big. Twice the amount required to be transferred by the company to the fund. See, suppose the unspent amount is there and you have not transferred it, then 2 times the amount to be transferred, or 1 crore, whichever is less. For officers, it is 1/10 of the amount to be transferred, or 2 lakh, whichever is less. So in case amounts are unspent, they feel that you shouldn't keep it. So if you have not transferred it, then 2 times for the company and 1/10 for the directors, officers. Next. Central government can also give directions to company to ensure compliance of provisions. And for certain IFSC companies, it won't apply for 5 years. Okay. We already know what is an IFSC company, International Financial Services Center company. They have been exempted for 5 years from operation of CSR. Next. We are moving on to the next topic, which is internal audit. Here again, the Companies Act 2013 has introduced compulsory internal audit. Earlier, internal audit was voluntary, and as part of CARO, earlier law, before 2013, 1956 law, the statutory auditor was to ensure that there was a internal audit commensurate with the nature and size of the business. Nature and size. Now they said no. Certain companies compulsory should have internal auditor. Listed company, 100% they should have internal auditor. Listed company, even if they do not satisfy these criteria, should have an internal auditor. An unlisted public company which has any of one of these criteria, if it satisfies any one of these criteria, unlisted public company, what are they? Paid up share capital of 50 crore or more during previous financial year. PFY means previous financial year. So, for example, for current year, whether internal audit is applicable, you should see the balance sheet of 31/3/23. If the paid up share capital, both preference and equity, more than 50 crore, done. You have to have internal audit. Turnover 200 crores or more, internal audit. If the outstanding loan borrowing from banks PFI is exceeding 100 crores or more, you should have. Or do you see the or, which means even if one condition is satisfied, then outstanding deposits of 25 crore or more during, then this is for unlisted public company. Even a private company which has a turnover of 200 crores or more should have compulsory internal audit. Also, if it has outstanding loans and borrowings from banks or public financial institutions, then exceeding 100 crores, then it has to. So please remember these limits. So remember the limit for CSR, remember the limit for internal audit. Both are important, frequently tested. I think I'm not taking query pad questions today for certain reasons, but I will try to go through your questions and I will try to answer them in the next class. But so I remember that Ruturaj Honmane, who attended the last class, very clearly said, sir, CSR regularly questions are there. Absolutely correct. And internal audit also questions have been asked regularly, which means that for you it is important to study this. Next. So here is a company, Natraj Limited, is an unlisted public company having paid up share capital of INR 80 crores. Okay, and the turnover was 110 crores. So turnover is less than 200, but share capital, paid up share capital 80, more than 50 crore. So is it mandatory? Yeah, even if you satisfy one criteria, it has to appoint. So yes, you have to appoint an internal auditor for 21-22, because as on 21, they are satisfying now. So for the immediately preceding year, previous financial year, paid up share capital is 80 crore. Therefore, they have to have a internal audit, compulsory. Next. So since it fulfills the criteria of paid up share capital, you have to be. They should compulsorily appoint an internal auditor. Next step. Here is a company, X Limited is a listed company having a paid up share capital of INR 25 crore, less than 50 crore, and turnover of 100 crore, less than 200 crore during the financial year 2021. Now the company secretary has advised the board that it is not required to appoint internal auditor as the company's paid up share capital and turnover are less than the threshold limit. Do you agree with the advice of the company secretary? See, far be from me any intention to say that company secretary is wrong. But in this case, I think I'm reluctantly forced to say that Mr. Company Secretary is not aware. What do you think? Am I correct? Next. See, though both the criteria are not satisfied, neither paid up share capital nor turnover criteria is satisfied, still for a listed company, compulsory internal auditor, whether it is satisfying the criteria or not. Only for unlisted public company, the criteria are there. For a listed company, even if it is less than all this, less than the criteria, if it is listed, then compulsory internal audit, which means, think about it, all listed companies should have internal audit. What I'm saying now, it's a huge opportunity now for us as members of the institute. It's a huge opportunity in internal audit. I doubt if all the listed companies would have appointed an internal auditor. Okay, check out. So this is a huge opportunity. Next. See, here is another company which has a paid up share capital of 45 crores, turnover of 250 crores. So here the paid up capital is less, but the turnover is 250 crores more. So the accounts manager has said that they are not required. So, okay, accounts manager, okay, he can make such mistakes, but you as a member cannot. So, since the turnover condition is satisfied, Kim Private Limited should have, and though it's a private company, even a private company where the turnover is more than 200 crore, it has to have a compulsory internal audit. Next. Since the company is fulfilling the turnover criteria, even though it's a private company, it should have a internal auditor compulsory. Next. Next. Who can be an internal auditor? Chartered accountant, no doubt about it. Cost accountant, okay, not bad. Other professional, I don't know. Who are these professionals? Maybe compulsory. I don't know. As of now, no. As of now, chartered accountant, cost accountant. Though an application is being preferred for company secretaries also, let us see. Next. I don't know if you're aware, there is a separate institute called Institute of Internal Auditors. It's a very nice body. And being a CISA, I get invited to their conferences. They're very good. IIA, Institute of Internal Audit. Suppose you want to specialize, then you have to become a member there. It is an international body. They have their own exam. If you pass that, you will become certified internal auditor. But that is not recognized in India. India, only chartered accountant or cost accountant. Okay? Only CA or cost accountant. In my humble view, cost accountants actually have more capability in internal audit, and of course, chartered accountants who specialize in it. Who specialize in it. Now, one beauty is the internal auditor may or may not be an employee. See, normally statutory auditor, you'll be seeing in audit and auditors when we come, cannot be an employee. Employee cannot be statutory auditor. But internal auditor may be an employee. In fact, in many large companies, they have an internal audit, that is director internal audit or GM internal audit, who would be an employee. Okay, allowed. Internal auditor may be an employee. He will have a huge battalion of people under him to conduct internal audit of them. This is for large companies, listed companies, having 5 factories, 10 marketing divisions. So they'll be having a separate internal audit team. Okay, the internal auditor may be either an individual or a partnership firm or a body corporate. So the audit committee of the company or the board shall, in consultation with the internal auditor, formulate the scope, functioning, periodicity, and methodology of conducting. See, it's a huge framework. The audit committee has to put it in place, reporting, and then persistent irregularities, what is being done. Fraud can also be, see, internal auditors have a better chance of discovering fraud than ethics of the internal auditor. How does he disclose? Being an employee, what happens? See, non-employee, independence. Employee, what does he do? A lot of issues are there. Yeah, audit committee is your salvation. If you have a problem, come to the audit committee. That's the point. Next. So we come to an end of this session. I know possibly this is not what we normally have with a lot of query answering and all that. Don't worry. At the outset, I express my gratitude to the tech team of the Board of Studies for their wonderful support, and I really owe them, because I was having certain issues. It has been solved, and by the grace of God, the topic has been covered for you. But I'm sure you might have many doubts, in which case, no problem. If you have put it up in the query pad, I will ensure that the queries come to me. I will answer it either separately by a Word document. I will upload it in our portal, or I will answer it in the next class. Okay. So thank you for bearing with this different way of communicating with you, though not very interactive, but still, hopefully when we take up the topic again on 16th for audit and auditors, we'll be having more interaction. Till then, I thank you and wish you all the very best. Bye. Sir, session over, sir. Sir, I should thank you, sir, from the bottom of my heart. Thank you.